Kumar now joining us. Dhirendra, tell us, it was meant to be the biggest IPO in terms of, market cap. Of course, it's reduced in size, but much anticipated. Would you advise buying into the LIC IPO?
In the market, you never miss out on something substantial. And even if you are lucky with the allotment, then, it's not a make or break situation. Because if it's a great company which should be held for 10 years, you should be buying it even after that, because in the IPO, you will get a defined quantity. But let's look at, what LIC is. It's a big company. When I look at it, I have been looking at mutual fund industry. And this one company is bigger than, 1.5 times or maybe about 1.8 times than the Indian total assets managed by Indian mutual funds. Yeah. So this is more than an industry. This used to be the monopoly. And now it is still 68% of the life insurance business in the country. When I look at the complexion of the business, it has a lot of legacy issue in terms of the kind of policy it sells, how rewarding it is for investors. But let's look at some very basic things. It's a large company, profitable company being sold at a price which is close to its embedded value, which is a yardstick used by insurance companies to sell. So it might be cheap, or it may be relatively cheap, or it might be attractive. But don't rush, simply because there are just too many unknowns. One is that, I generally dislike government-owned companies. Government happens to be a very bad owner. And we have seen it time and again. But in this case, it is little different. This being an insurance company, trust is one of the critical capital of such a company. And government being the owner turns out to be a great plus. So in that sense, that is an advantage. The other is that this is not only a government company, it has promised to remain a government-owned company for all times to come, despite the public issues. So, and gradual disinvestment. So in that sense, and it's going to be very different from other insurance companies. Let's look at 4 or 5 good things about this company. It's big, unhindered, unfettered trust, a sizable scale. Also, there might be lot of latent value in many of its assets simply because of its legacy. Now, about the disadvantage, I think this is a company which sells policies. When I look at it from a consumer point of view, I think LIC is a very bad choice. And my belief is that if something is not great for the consumer, it will be a very big negative. It will be a long-term disadvantage for the company. So it entirely depends on how quickly it is able to change. And because when I look at the complexion, when I look at the endowment policy, the scale of endowment policy, or the total assets under management, the scale of annuity and life and term insurance, which should be the core of an insurance company, it is not meaningful. It is not good enough. So in that sense, investors or the policy holders will be disappointed. So it might look, there are things which might tilt the deal towards LIC, that it is attractive, it is large, it is big, and all that. But on the balance, I think give it some time, let it establish, let it establish in the public domain, and then I don't think investors are going to miss out if it's a great opportunity.
All right, Dhirendra, thanks so much for joining us. Questions around whether or not LIC does really remain attractive given the kind of diminished size of the issue, as well as the fact that it has some pretty tough competition.